Trading SPX 0DTE options is a great way to create weekly income because the daily expirations allow you to take advantage of that last day of time decay basically every day of the week. But it's extremely important that you have a system or strategy that you can follow because, as you probably know, the options prices on that last day can move very quickly and you don't want to be on the wrong side of the market on one of those days. So in this video, I'm going to walk through a recent SPX 0DTE trade I took based on an SPX 0DTE framework that I've been developing to help me stay on the right side of the market each day. And if you want to learn more about the framework, check the description after watching this video. Now let's get into it. All right, so the first part of the SPX 0DTE framework is to have some market awareness. What is happening in the market today that could move the market in maybe a surprised way? Today was Monday, September 5th. Typically, there's not a lot going on Mondays, but I still like to check some sort of economic calendar. I'm using the one from Daily Effects in this video right now. And we can see that from Monday, September 5th, there's a lot of low importance economic reports that are coming out. Factory orders was maybe the biggest thing. But what I've found over time that factory orders isn't going to move the market really. What we're really looking for are things like jobs reports, inflation reports, FOMC minute, rate hikes, anything having to do with monetary policies. So for today, we're not really expecting any market moving events to happen unless obviously there's a surprise that comes out. So this is before the market. We're saying, okay, let's look at some 0DTE trades. The second thing we're going to look at is the alpha crunching forecast. This is a daily forecast. Today is Tuesday, September 5th. And the forecast looked like this. And one of the things I like to look at for the forecast is for the number of SPX points. And we're not really seeing a strong move in either direction. You could quickly glance at this and say, hey, the forecast looked a little bit bullish after a morning dip. And that very well could happen. But the movement here is only -8 points. And we get up to +5. So this is not a strong trending day. I'm not looking at this as saying, hey, I think it's going to be a strong trending bull day or anything, because again, the magnitude of the SPX points is not that great. What I typically like to look for in the forecast, specifically for a trend day, is I want to see a 20-point move over the course of 3 hours or more. That's kind of my general kind of threshold, if you will, if I just want to pick a side. So on this day, yeah, around 10:30, we're down to -8. And by the end of the day, we're up to 5. So it's 13 points. That is not a lot of movement in S&P. So I'm not going to count on some trend. I'm really going to go into this day thinking that I'm probably going to end up in an iron condor of some kind. Doesn't mean I'm going to enter the condor all at once. I'm going to see what the market kind of does once it opens, but I may look to leg into an iron condor, and that's actually what ended up happening. So let's take a look at the chart of the day. The market is not over yet. I'm out of my trades, but the market's still going. We still have about 2 hours left in this day. But when the market opened, we had a small gap down and we did push lower, similar to what the forecast suggested. But again, I wasn't counting on some massive sell-off, even though the VIX was up. But it's also, we're coming off a 3-day long weekend. So there could be a little bit of extra movement on Tuesday because it was the first day of the week. We got a little bit of a push lower. So as we push lower, I didn't think the strength was going to hold, partly because of the forecast, but I sold an out of the money 44.80, 44.75 put credit spread, and I got a credit of 75 cents. Honestly, I wanted to maybe trade a little bit closer to the money, but because the VIX was up 4%, I was like, well, let me I want to leave a little bit more room to go. So I did go in with 3 contracts. I'll show the orders here in a minute, but the idea was if we pushed lower, then I could add to the position, go in with 6 contracts on the side, and then look for a bounce. Ultimately, I was looking for maybe a retracement to either fill the gap or come up to the gap window or possibly fill the gap from the open. So ultimately, the market did fill that gap. So this yellow is the put credit spread I sold for 75 cents. A few bars later, as the market started to move up, I went ahead and sold the call side because remember, I didn't think the strength of the bull side was going to be very strong. One, because the forecast wasn't very strong, but also the options market was pretty weak. And I'll show you that here in a second. But ultimately, by a little bit after 10 a.m. Eastern time, I was in an iron condor. I was in the 44.80, 44.75 put credit spread, and I was in the 45.15, 45.20 call credit spread. So at this point, I'm looking to just take profits as they come. At this point, the market is just going to do what it does, and I'm thinking it's going to be relatively contained. One of the things that helped me sort of enter, and this is one of the things I talk about in the framework, is technical analysis and options market analysis. Now on this day, since I was basically trying to get into delta neutral, I didn't really use much technical analysis other than we were at a big strong level 4,500. I thought might be support and maybe a gap fill, that type of thing. I do have a trend indicator that I use from time to time, but I had turned the trend indicator off, because even though we got a buy signal right here, I know that I don't want to go long on that buy signal. So I just turn my trend indicator off and I just look at candles and kind of look at some of those key, what would be key levels. So the other part is the options market analysis. And here I'm looking at market net flow. And in the beginning, when we saw and this is in SPY terms, when the market kind of sold off, we did see some call selling and put selling, but then both reverse at the same time. So slight put selling, a little bit more call selling, but they both went up together. So this is telling me there isn't a strong trend in either direction. There's no sentiment. The other thing that's kind of a clue about options market sentiment is, well, how much options are being traded? Well, at that time, there was, negative 1.5 million or so being sold on calls, and maybe less than 1 million being bought in puts. So that's very, very small amount of options. So what it's telling me is that the options market is not convinced that the market's going to go up or down. And this is as of, those entry times, which goes back to help confirm the forecast, which is saying there isn't going to be a strong move either. So with that, I'm going to be looking at more delta neutral trades, and I ended up legging into the iron condor. So I put profit targets on there. One of the things I've been kind of thinking about is credit targeting. In this case, I was targeting about $1. I didn't get $1 on either side, but I was comfortable with the 90 and 75 cents from where the strikes were. But I'm basically trying to target close to $1 with these 5 wides. And I'm also starting to consider, instead of just straight, like 50% max profit, I'm starting to think about profit targeting. So if I can make 50 cents or $50 per spread, I think that's something that I was, kind of starting to lean into. So I did that today. If you think about taking a credit of 75 cents, half of that would be buying it back for 35, 40 cents. I waited to 25 cents because I had enough room here that I was comfortable. So I was able to eke out 50 cents out of that spread, which is closer to 60, 70% of that max profit. And on the flip side, when I sold the call spread, that's the blue highlighted trade here, I sold it for 90 cents and bought it back for 50 cents, which I only got 40 cents. But at this point, it's in the afternoon, and we had kind of come up to this level. So I was just happy to beat. I just wanted to get out of it. I wasn't going to try to wait around for another 10 cents or whatever. The other thing that was, maybe telling me to get rid of this call side was the options market had, the calls had kind of outpaced puts by this point in the afternoon, although it was pretty choppy. So I, as I got that kind of dip lower, I was like, let me just take the profit and get out of there. Alpha Crunching is also saying, hey, there could be a little end of day push here. And since we were only, 10 points away from the money, I was just wanting to take the profit. So I originally was targeting to buy the spread back for 40 cents. That would give me the 50 cent profit per spread. And I just upped that a little bit just to get out. So essentially making $50 per spread on one side and $40 per spread on the other side. I sold 3 contracts here. I'll throw up the orders so you can check those out, and you can see that those times are. So again, if you want to learn more about the SPX 0DTE framework, I'll put a few links in the description. I have some free videos if you want to check that out. Thanks for watching, and we'll see you in the next one.